Hey guys, Morgan Smith here. I want to talk today about a paying over appraised value on properties. It's not a bad thing for you buyers out there if you actually want to buy a home, okay? Because you're having to do this and you got to put aside what's right or wrong and discover that this is a financial decision and an investment in you and your house. Even when I bought my home 8 years ago, I paid $6,000 over appraised value. And I work in the industry, guys. I was doing my own loan for free, okay? Now, for you buyers out there, and I want you agents to share this, want to run a scenario by you. Let's say you're buying a house for $280,000. Well, recent stats in Arizona, we have appreciated between 7 and 11%, depending on the area, in property value in the last year. So let's just use 10% because I'm pretty confident with where we're at with interest rates right now that 10% is maybe below what your house is going to appreciate over the next year, okay? So if you buy a house for $280,000, that means if you wait or if you buy it, whatever, in a year from now, it's going to be worth 10% more. What is that? That's $28,000. So I've heard from a lot of buyers saying, oh, well, I want to wait until there's more inventory on the market because I don't want to pay over appraised value. Bad idea, okay? You end up paying for it one way or another. If you wait 6 months, a home in that price range will cost you about $14,000 more in purchase price. And let's say it actually does appraise in 6 months, which I think we're still going to be in the same issue of not having enough inventory, and you're still going to have issues with appraisals. But let's just say it does. That other $14,000 that you're paying in purchase price, you're financing the majority of that over 30 years. Now, let's go back to that scenario. We're a $280,000 purchase. Let's say it appraises for $270,000, and the seller was like, nope, we're not going to drop it. And you have to come up with $10,000 more. Well, pretty simple math. Waiting 6 months is $14,000 more in purchase price, or buying now is $10,000 you have to come up with out of pocket. And not to mention, that is going towards your principal on the house. It's not going to interest. You're not financing over 30 years, and you're getting a home. I can tell you right now, I'm sitting on a ton of equity because I bought my house 8 years ago, so I don't even care about that $6,000 I came up with out of my own pocket. You buyers just have to realize this is what's happening in this market. Right, wrong, whatever it is, principal has never made anybody a good investment, okay? It's not about principal when you're buying a house. It's not about emotions. It's about making the right financial decisions for you and your family. And yes, let me take back one thing. It is about emotion, because if you love the home and that is your home you want to be in, that little bit of money after the memories you build over the next 5 to 10 years doesn't mean squat. So that's where we're at in the market. So think about it, really mull this over, but it's a good decision, guys.